Last weekend, the crypto market saw its largest liquidation event ever. A staggering $19 billion wiped out in just a few hours. And let me tell you, it was a setup. Some alts dropped by 99%, but 5 coins fought back hard, and they are about to reveal which projects can actually survive the next crash. As usual, I'm not giving you any financial advices here, and I encourage you to do your own research. Friday afternoon, Bitcoin plunged from about $122,000 to $100,000 within just minutes of the Trump tariff surprise. The rest of the market followed on the way down for the biggest crypto massacre in history. But something smells here. Minutes before Trump announced new tariffs, an anonymous account on Hyperliquid opened a massive short on BTC. The timing lines up too perfectly. And look at the result, around $190 to $200 million profit in just one day on Hyperliquid. This just screams insider trading. Then Binance comes in too. Due to heavy market activity, our systems are under high load. Some users may experience intermittent delays or display issues. We're actively monitoring the situation and working to resolve it. Funds are safer. Intermittent delays. People couldn't close their positions even if they wanted to. Stop loss orders were completely ignored as the price just flew past them. We had nothing to do but to watch as it all goes down in flames. But why were those cascading liquidations? My suspicion is that Binance was adding spoof orders. They put fake orders, tricking traders into believing support exists where it doesn't. Then, as soon as the price approaches that level, Binance deletes their order and the price sinks further. And this has happened on a massive scale. Here's another take. Cook says, quote, "The liquidation cascade on Friday was a coordinated attack that began with a USDE DPEG. Binance controlled the vulnerability and the attack vectors. The timing of the attack around the Trump posts was cover," he says. "It is my belief Binance carried this attack out themselves in an attempt to cause an industry-wide mass liquidation cascade with the ultimate goal of destroying Hyperliquid. It didn't work," end quote. That's an interesting take, and it remains to be seen which version will prove true if we ever get to the bottom of it. Anyway, there wasn't much to be done for us. Even positions at 2x leverage got liquidated. We know something's rotten in the state of Denmark, guys. They know that we know. Yet, nobody's gonna go to jail or fix the damage. My goal today is to show not only how we can avoid the huge losses next time when such an ugly manipulation happens, but also to benefit from the chaos. And part of that is picking the tokens that do well after the initial shock. So here are some alts that dropped significantly but did well to recover. Number one is Zcash. After many years, the privacy token made an epic comeback from $63 to $270 in just 12 days. That's over 300% gains. Then Zcash crashed 44% to $150. Looks bad, but still held up surprisingly well when you compare it to Sui, which saw 83% drop, and Atom 99% underwater. Zcash bled, but then it quickly shot back up 96% to $298, the highest price since November 2021. With that performance, it seems that Zcash can end up as the textbook definition of anti-fragile, and I trust it will do well during the next Black Swan event. Now, after way too many Nassim references within a single sentence, it's time for the second coin that did pretty well in the turbulence. And that's another member of the privacy sector too, the renaissance of the privacy sector. It's Dash, which pumped from $20 to $50. That's 140% within 2 weeks. Well, on October 10th, it took a bad hit, going to $30, almost 40% decrease. Since then, however, it's back as new and the price doubled to over $60. I believe this comeback of the privacy coins sector is not just a fad. It seems to me that the crypto market as a whole is now mature enough and the people in it are just beginning to seek privacy more proactively. That's especially with the EU and governments around the world increasing their appetite for authoritarianism, I think. Now, I told you that many are absolutely convinced that Binance is involved with the massive liquidation scheme. Let's take a look at what's happened with their own coin, BNB. Look at the chart. It's been only up since June for Binance's token, from $600 to $1,350. Less than 5 months, 120% jump for such a massive coin. Last Friday, it plunged 30% to below $900, but today it's back to new all-time high levels, above $1,375 as of the time of recording. At number 4 is another coin related to Binance, the major suspected culprit of October 10th. That's Cake. It's the native token of PancakeSwap, the DEX built on the BNB smart chain. Within 7 days, from $2.50 to 4.65. That's an 85% increase. It crashed though 60% to 1.55. Yes, but it has recovered to $3.50. That's the resilience I'll be hoping for next time the insiders decide to rug the market, if you ask me. Last one is the heavyweight on the list, Ethereum. The charts look pretty nice since April. In August, we hit a long-anticipated new all-time high after almost 4 years, $4,946. In the last couple of months, we had retraced slightly. On October 10th, it was sitting comfortably at $4,400. Then came the dump. Within just a few hours, over 21% down to below $3,500. Now it's back up to around $4,200, and I remind you that the bull predictions still call for $15,000 this cycle. Those 5 coins showed us what resilience looks like when the market is being dramatically manipulated. But knowing which coins bounce back is only half of the battle. Here's my practical playbook on how to survive the next crash with just 3 simple steps. 1 is don't keep all your crypto on leverage. People have lost millions because they had their entire portfolios leveraged even at the seemingly harmless 2x. Hold most of what you got on spot or go for liquidity providing instead. Second is tied well with the first step. Trade with only a small portion of your portfolio, 1 to 5%. This is one of the fundamentals of risk management and will keep you alive. And the last one, put sensible stop loss levels. In most cases, that will keep you safe from getting wiped out completely. This most likely wouldn't have saved you this time around though, as we already mentioned. Now, that's the reality, folks. $19 billion gone in one weekend. Insiders made millions while retail got liquidated. But now you know which coins can survive the chaos and how to position yourself for the next one. Zcash, Dash, BNB, Cake, and Ethereum prove they can take a punch and bounce back fast. Keep them on your radar and remember the 3 rules. Stay off leverage, trade small, use stop losses. Now, if this breakdown helped you see through the manipulation, hit that like button right now. Drop me a comment and tell me which coin you're loading up on for the next crash. And ultimately, subscribe so you don't miss the next time they try to rug us. I'm Stan, thanks for watching, see ya.